You're live.
Hey everybody, Jeff Gibby over at MetaStock. I hope you're doing well today. Thanks for coming. We've got Ed Downs. He's going to talk a little bit about Fulgent AI, a little bit about the new options stuff that's in MetaStock. And he's got a lot. He's been working pretty hard to get ready for today's event, so I'm pretty excited to see what he has to say. Let's go ahead and get started today. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of that software, any trading strategies, or any information provided in connection with the company. So there you go. Hope you enjoyed that. Let's go ahead and bring Ed on here. How are you doing today, Ed?
Hey, great, Jeffrey. How about you?
I'm doing good. Doing good. Let's see. I just sent the screen controls over to you.
Outstanding. I've got it. I have the con.
Okay. Perfect.
But I'm really just dying to hear one of your jokes right now.
Oh, well, okay, sure. Yeah. You know, for those of you that are not paying it, don't pay attention to like our pre-rolls when we're doing audio tests and stuff. I pick up a lot of jokes that I get from my daughter, who's in 3rd grade now. And so it's been a while since I've got a new one, but I'll tell you one I don't think I've told you, Ed, before. What is the coldest country on Earth?
Antarctica.
Wrong.
I know.
It's
Chile.
Chile.
Chile. Oh, you sly dog. Tell your daughter kudos.
Right.
That's great.
It's all
Well,
yours.
thank you.
With that.
Thank you for humoring me about that. You want me just to jump in, or you want to say a few words? Or are we good?
I think I'm going to just get out of the way.
Oh, well, cool. Okay. Well, again, thank you for having me on to talk about our technology and using it in MetaStock. It's really an honor to be here. And if you've been to one of our webinars before, you probably know that I've been associated with MetaStock for, gosh, a long time, going back to 1991. And basically, the 30-second version of me and MetaStock is that I'm the automation guy. I did design automation as an engineer when I graduated college, and I love automating stuff, making things happen by themselves. So that led to trading, and of course, then that led to, well, there isn't much automation out there, so I decided to start a company to focus on that. And one of the early things we did was a set of utilities that could drive software from the outside. It was for DOS, so ancient operating system now. But at the time, MetaStock DOS was out, and Steve Akalis was kind enough to bring me on board and sold our utilities that automated MetaStock to do some things back then that people wanted. And so we've had a great relationship and working with Jeffrey for a couple of years now and different kinds of projects. And this one is really dear to my heart because this is the ultimate automation we're going to be talking about today, which is artificial intelligence applied to MetaStock. But the title of today's presentation is, drum roll please, Trading Call Options with MetaStock for Substantial Gains. And this is a personal, strong focus of mine right now, because I'll tell you, I just get giddy when I see these gains in these trades. It's just amazing what can happen with call options. And, I know a lot of people say calls are risky and all that. Actually, the opposite is really true from my perspective. And I want to share with you why I think that. But the other thing I want to do today is really help you work with MetaStock. So we're not going to just be talking about Fulgent AI. We're going to be looking at MetaStock 17, because let me tell you something, folks, and you probably know this if you have it. That is an amazing piece of software. I mean, they added an option capability to MetaStock 17, driven by the Reuters data, I'm assuming, and it is so cool and really helpful. So if you haven't looked at options in MetaStock, you need to. It's really a great thing, and I want to get you going on it, show you kind of how to look for things in charts and trade options for substantial gains. We'll also be looking at our AI. I mean, I'm here pretty much on behalf of Fulgent Technologies, which is our AI-focused company. I have several different things that we do, but Fulgent AI is really about driving artificial intelligence out into the marketplace for traders and making them aware of what it can do for them. And of course, that's our business. So we'll be talking about that and the product that we have for MetaStock. And then I'll be showing you a mechanical option trading system that's pretty amazing based on this technology. So let's dive right in and let's look at the power of call options. Okay. So to do that, I just want to talk about something, and it's kind of a fun thing that I cooked up. And it has to do with playing a flipping game. You could also do this with roulette, of course. You got the black and the red with that one little white or two little white squares they have that put the odds in the house's favor. But just a basic game of heads or tails, black or red, that kind of thing. But in this particular one, we've got an advantage because if we hit tails, we flip it to tails, we lose the $1 that we put up. But if we get heads, we win $2. What a deal. So those are nice odds, right? And the question is, would you play the game? And what do you think would happen if you played it for a while? Well, what I did is I went into Excel and just ran a whole bunch of simulations in Excel with this. And you get all kinds of curves because it is random, but they all go up. And you would expect that because the odds are strongly in your favor if you're trading in a 2-to-1 situation. So with about 60 flips, your gains are going to be somewhere in the 20% to 60% range. So how does this apply to option trading? Well, let's look at an example here. And this is a little detailed chart, but I'll kind of go over it with you. This is REGN a little while back. And this particular date, I was looking, there's a nice breakout signal here from a consolidation. So let's trade an option. And you can see the chart didn't move all that much. It really didn't. So what we want to do is buy just out of the money call. We'll be talking about that in MetaStock here in a minute. And then holding it. And, in this case, I only had to spend $290 to control $34,000 worth of REGN. That is amazing leverage. And the only thing I can lose is the $290. But what can happen is if that stock moves, and we're going to talk about how you determine if it's going to move or not, I'm going to, probably double, triple, quadruple that option position. In this case, the stock only moved up 8%. But that call that I got bought right there went from, it's the December 372 call, went from 290 to 870. So, that's a huge gain, more than 200% with just an 8% move in the stock. So you don't need a lot of movement in these stocks to get these huge gains on the option positions. Of course, what you really want to happen is if the dadgum stock just takes off like a rocket and, you make so much on that trade that it covers 4, 5, 6 losing trades. So that's kind of the objective, what we're trying to do. All right. So with basically we're looking for a 2-to-1 payout ratio. That's the heads and tails. You win, you lose one, win two kind of thing. And so what we need to do to make this happen is to find trades with a very strong directional bias. Any technical signal that is very likely to move a lot if it's right. Okay. And then we want to select an option based on how far we think that move is going to go. And that's based on several chart factors. And then we want to hold it to that point in time, which would be the expiration of the option. And what that actually does is it simulates a loose stop. I don't know if you've ever heard Larry Williams, any of his things that he's done, but he was trading futures, which are very similar to options in terms of the leverage you have, and was saying, loose stops make money. If you tighten your stops up, you're going to lose because your stops get hit at a loss. And now when the trade takes off and makes all that money, you're left behind. So loose stops are really, really good. They make people nervous, but this is like the ultimate loose stop because you can just let the option ride. You don't have to worry about where to get out because your risk is so low. And provided, however, the investment is low, you can't put your whole account on some call options. Don't do that. That's a recipe for disaster. Because you are going to, you're going to have losses sometimes. But if you keep that investment low, and I'm going to suggest about 10% of the account, and your winners outpace the losers because you're taking directional trades that are poised to move, your account should grow. And that's basically how this works. And in some cases, it can grow dramatically. Okay, so here is where I'm going to transition to actually looking at this software, MetaStock 17. Again, amazing. I've had so much fun working with it. And just let me throw a little kudo over there, the MetaStock folks. I have had to call for support a few times because I didn't know how to do something. And they've always been so nice and so helpful. Chat support, phone support. So I mean, I've been in the software business a long time, like 30 years. So I know good support when I see it, and those guys are awesome. So thank you, MetaStock, for helping me so much with things I was trying to do. So what we're going to do right now is go into MetaStock 17 and look at a very easy way for you to trade directional options that is pretty easy to master. There are a lot of trading systems. There are many experts in MetaStock. I've looked at quite a few of them. They're very good. This particular technique is simple, easy to master, and it really works. And the whole idea is to plot an MACD histogram or just the MACD system. I like histograms because it's a little bit easier to see the movement with a histogram. You've got the actual difference between the two moving averages, which is what moving average convergence divergence is. You've got that as the blue. That's the difference between them. And then the red line is a trigger line applied on top of that, a moving average. 9 period is the classic moving average. So, and that's all coded into MetaStock. I'm going to do it right now, but I wanted to look at this chart for a second just to show you what we're kind of looking for. The idea is that when you see these crossovers happen, you look at the chart and you're trying to find an oversold point. And the more oversold it is, the better. But an oversold point, like this one was really good. This was pretty good. This one was really good right here. Like really, really dropped hard, leveled out. MACD histogram starts turning up. The moving average of that is crossed, and there you go. So it's a great signal, and you can just look at the chart. So things you can do is, are you with a trend like this? That's really good. Is the width of the movement a lot? So you can plot a Donchian channel or Bollinger Bands on this and see you have a lot of width in that, a lot of movement down to that point. And you know, those are bargain points. The market likes those because the stock was trading at 240, now it's at 215. You know, what a deal, go for it. So the market just buys those things. And some people call this reversion to mean trading. It's just the ebb and flow of the market. It's what happens every day in thousands and thousands of stocks. So if you're just a little picky and try to find the ones, like I said, that have a nice wide berth, a lot of movement down, the MACD histogram crossover, and you buy your option right there and let it ride, you're very likely to get these amazing gains. And it's like this one, you know, 215, it went up what looks like about, 8-10% up into this zone up here. So that was even better than that REGN trade that we looked at. So it's works out really, really well. Okay, so let's go and go over to MetaStock now. And let me go ahead and my remote desktop logged me out here. So let me get that going. Welcome, computer. Okay, so let me go ahead and put a chart out here. Okay, a chart. And we'll just start with American Express, open that up. And here we go. So I actually edited the MACD crossover scan that is in the software. The one that I found is called Equus. Equus was, of course, the original name of MetaStock like 30 years ago, 20 years ago. So they've provided that. I think the new software doesn't have it, but it's probably called a different name. I mean, if you don't have like a really old version. But I found this, it's not a big deal. It's just the same thing. MACD, it's this signal right here, right? MACD moving average crossing over the line crossing its moving average and showing where those are. And so let me go ahead and zoom in a little bit here. All right. And we're just going to kind of go through a few charts. So you can see when this is down here low and it crosses, and we had a false signal there, but a really nice one here, a nice one here, a nice one here, a nice one here, and a nice one here on the long side. I prefer trading the long side. If you're going to trade the short side, you need to see real weakness, in my opinion. You need to see a major move down, a pullback in the trend, and then the start of another move, which of course this will pick up down here. But the short side is just harder. So I prefer and would suggest you stay on the long side for that reason. I'm just going to go through some charts here really quick. Let's see what we got here. Here is another one. But you can just kind of see. Look at this one. That was probably 3-4x. Let's see, was from like a 340 number here to about a 380. So what you could the way you can calculate these gains just looking at charts is real easy. Okay, if it's $100 or less, we're going to be buying options that are just out of the money. And I'm going to show you how to do that in OptionScope right now, but I want to explain it first. So just out of the money, which means if you're sitting here, you want to buy the option that's just like right up, like right there is like the 340. So maybe the 345, something right here is the strike price of that option. And the rule of thumb is for $100 or less, they're going to cost about $1. $200 or less, $200 to $100, about $2, and $300, $3. That's about the higher price the stock is, the more premium, because things move in percentages, and so 5% of a $300 stock is a lot more than 5% of a $1 stock. So that's why the pricing goes up for higher price stocks, but it also moves more. So that's okay. So we get about, let's say let's call it the 350 right here. So we're getting this signal, we get in, and it ends up getting up here in about 14 days, which we're going to be looking at that time horizon, about 14 days out, to about 385. So that's about 35, about 10%. So what happens is, as the stock goes in the money, you're buying a call option at a 350 strike price right here. And so once the option is above that, I can buy the stock for 350 and then sell it back to the market at any of these prices up here, going up to 380. So obviously the intrinsic value is the difference. It's the current price minus minus the strike price. So 350, 380, that's like $30. Okay, if you paid 3, that's 10 to 1. So, and there's other things going on. There's changes in volatility, so it's not exact, but that's a rule of thumb of what happens on these. Let's go through a few more here, and then we'll actually do one. All right, I'm looking for a right edge that I can target here. All right, so far not yet. Let's see. Oh, we're getting close on this one. You can see that's going down there. As soon as it starts turning around, just like right there, that's a great place to trade. Okay, let's see. All right, here's one. Oh, I wish you found this one. Okay, that's a nice trip move there. I'm just going to go through a few more. Johnson, looking for a right edge candidate. I could do an exploration, but I don't want to take the time to get into all that. I just want to find one. Let's say, just for fun here, that we had, let me go another one here, that we saw, this one's getting pretty close. Let's say we actually, on MRK, that we had one of those little crossovers. We don't have it in this chart. You got a nice one back here, beautiful. And another one here. This is not beautiful because the MACD line is not down here in the bottom, and I was pointing that out but didn't mention it. You'll find little crossovers up here in the overbought zone. You don't want to buy those. You want to buy them when they're oversold. Remember, way down, it starts to turn back up. That's where you do this. So what I want to do is find an option trade. So let's go through the mechanics of how that works. I've got some slides on it. And by the way, I have a way that you can get this presentation and a report at the end that I'll give you the link for that. So don't worry too much about that. I'm going to pass this on to you because I've got some detail in here that you're probably going to want to refer to. So the first thing, of course, is you get your candidates. So you run an Explorer on the optionable stocks. There's 4,500 of them. And whichever, you can use this MACD crossover or Fulgent, whatever it is, and you get your candidates. Okay, that's the first thing. All right. Now here's where we start to get a little in the weeds, not too bad. It's not hard. So then you want to chart it from the expiration by double clicking that expiration line. So double click, boom, chart comes up. Add an indicator window and then right click OptionScope to load the underlying symbol into OptionScope. So let's just do that. I know I tend to talk kind of fast because I have a lot of material, but I'm going to slow down to show you this because I want you to really get it. Okay, so right click in here, OptionScope, and I already added a pane up here, and you know the way you do that in MetaStock is right click, inner window, new, and it will add that window for you. I also changed the property to take off little title bars so they wouldn't take up space. That's all I did. So I added a window here. So what I'm going to do is find the ideal, just out of the money, just a little above in price. So this is what is so cool about this software that they have made. I mean, I love it. It's just so easy to do. All you do is you go here, what expiration date do you want to use? And we're looking, 14 days out plus. So that's going to be like February 14th. The problem with the weekly options is they're not going to be very liquid. So I just go ahead and go to the Friday, to the February 21st. Okay, and there they all are. Because that's where everybody trades, right? You've got enough volume going on. It's still not a lot. There's 106 on this one right here. If I go another one, you'll see the volume is much less on the weeklies. So the next monthly option, the strike price, I want to go near the money if I can get it. And but out of the money. So let's see, we don't need to worry about expiration type because we've got that up here. Here's our expiration, but I want to go out of the money. I want it to be cheaper. I can buy in the money options. That's more like an investment. Instead of paying $1, you're going to pay $3, $4, I don't know, a lot. So your risk is much higher. And that's why you want to go out of the money. One thing about the option market, it doesn't think anything about the chart. It doesn't think about where it's going to go. It doesn't care. If you look at some products that try to value an option trade, you see this random walk curve on the chart going like this, because that's how everybody trades options that sells options to the market. They're saying, well, about where could it go? No, but it's not part of the equation for that kind of option trading. For us in doing this, it is. So we think we've got an edge because of the indicator we're looking at. All right, so okay, so we want to go just out of the money. Like I say, the market, they don't think it's going to go that way, so they're usually reasonably priced. And then we're going to go over here and get the right option out of these right here. Okay, so let me see if I can expand this a tad. If I can grab it there, because there's more fields. So I can see the strike price and the expiration date. All right. And let's go look at my slide again, because you're going to get this so you can refer back to it. So we've got OptionScope up. We've got a little window up here. We're good to go. So then we look at the parameters, and I just did this, 14 or so days out, near and out of the money. Those are the 3 things you want to set. And you get the grid, and it shows you those options that meet that. This thing, I haven't seen a tool like this before. I mean, it's really good. So again, it's awesome. Okay, so then what we're going to do, is look at the volume, and we're going to look at the last price. You really want to get something around $1 if you can. Now, it depends on the price of the option. So if it's above, 200 or so, they're probably going to be around $2. Like I said, that's kind of a rule of thumb. But if you may be starting with a $1,000 account, and you can do that with this and you can do it risking just 10% of your account. You can literally trade $100 and take an option position and control, $20,000 worth of stock. And it's fun because you're not too worried. It's $100, so you can do that. And if you are doing that, though, you need to find the lower priced options, just under $1, right about that number, really close to it. So somewhere in there, 50 cents to $3 kind of maximum. We want to pick an option that meets these criteria and that has enough volume. And then we really would like to see that bid-ask spread right there to be small, because you're taking that haircut the second you put the trade on, right? The poor guys on the floor have to make money somehow, and they make it all day long by charging you a commission, basically, for buying and selling. You buy at the ask, you sell at the bid, and you're going to eat the difference. So if it's a few cents, big whoop, who cares? But if it's like 50 cents, yeah, it's a big deal. That's a big loss to take right away. So you got to really look at those 3 things: volume, price, and the bid-ask spread. All right. So let me see here where I am on my slides. Yes. Okay. So then what we want to do, so we're going to pick that right now. I go back to my MetaStock here, and I'm going to look, and I've got, all right, let me look in here. I've got, here's one. Let's see, the volume 133. It's $1.17. It's the February 89. All right. And I can look at the chart and see where that is. I know it's about right. It's about $1. I can drop down here to this 96 option. That has actually a lot more volume. That's a better candidate, actually. And the one below that, whoa, this interesting market, 70 cents. There's 3,900 contracts volume on that one. That clearly is the winner of all 3 of those. So let's do that one. Okay, right here. All right. So I've got the most volume. It's within my price parameters. What bid ask. Okay, it's only 3 cents. See, 70-cent bid, 73 ask. I'm going to pay 73, and if I turn right around and sell it in 2 seconds, all they're going to give me is 70. It's all right. 3 cents times 100. It's $3. No big deal. So each contract is worth 100 shares, of course, and so we're going to pay $730 for this contract. Now, if you're like I say, if you're trading with, see, yeah, so I said 730. That was wrong. Now wait a minute, Ed. That can't be right. No, $73 for the contract. Okay, sorry about that. So yeah, 73 bucks. So that's well within your range if you're trading $1,000 account and you want to just do one trade. So that's fine. Okay, so let me go ahead and double click this now. This is the key. You want to bring up the option chart. Another beautiful thing about this software is that you can do this. And like I say, most people out there with trading software, even brokers, don't have this historical data like this. So it's just a blessing to have that. I'm going to show you why in a second, but that's just amazing. So, okay, let me go ahead now, and I need to get that chart back that I was just looking at, and I found the easiest way to do it is to hit Window Cascade. What that does is it cascades the last one you're looking at with this one. And now what I want to do is grab that option symbol, the option chart, and drag it right up into that open area because I want that there. I want it on top of my chart. Very important. Okay, so there it is. All right, now I don't really need this guy anymore, so I can just get rid of that. And let's go ahead and bring this up here. Okay, so here we are, around 70 cents or so. You see the dollar right there? So that's about what it costs. Look at the movement potential of this daggum thing. Here we got up to a very equivalent, like a 350 recently on similar moves and options going from here up to here. If this thing takes off and gets up into here somewhere, it's, probably a 400% gain. It's still early. We don't have the signal that I'm using in this example. So, but I'm just showing you the mechanics of how to do it. Okay, let's go back to this. And our next slide shows or talks about what I just showed you, which is you select it based on those criteria, Window Cascade, you drag it over, and then you close that option chart that came up. Pretty easy. Okay. Then what you do is you go back over here and you want to enter that order in the market. So if the ask is 73, put a stop in at 73, a buy stop. The market makers like to game stuff, and so why pay 75 or 78 for it when you could probably get it for 73? If you don't get filled, you can go ahead and put a market order in. But anyone that trades options a lot will tell you need to constrain the people on the floor because they will take advantage of you. I mean, I'm sure they're nice people, but they will do that. So it's part of the game. Okay, so that's what you do. You don't have to do that. If you're overnight trading, you're going to put it in for the next morning, that's fine. You can still, however, look at yesterday's closing ask and put it there. The problem there is the price can run away from you, real easily. So if it's overnight, you probably just want to do a market order. Okay, so then you've got your position. So you've got this option contract here, this beautiful chart right above your main chart showing you exactly what's happening with your position. It's so cool. So, you just watch it. And I'm suggesting to limit to 10% of the account. Now, why do I say that? If these things make so much money, why not put 50% of your account on them? Because there are times where you're going to get hit. You're going to have several trades lose money. It's going to happen. So if you're only risking 10%, think about it. These trades will move 3, 4, 5x. So if you're trading 10% of your account, you have the potential to make a 30, 40% return easily, even risking 10% of the account. So there's no reason to just get greedy and stick your whole account out there. So just don't do that. So you can do, if you see like 3 or 4 trades, do them at 3% each. If you're trading a $10,000 account, that's real easy. If a $1,000 account, you're a little more constrained. You could probably do just 1 trade, maybe 2 if you can get 50-cent options out of it. But these are kind of the parameters. You just want to keep it 3 at 3%, 5 at 2%, or 10 trades at 1% to keep it within your 10% range. And this allocation approach allows you to have mistakes, and you've still got your account. You can keep going, and then you'll get a run. And there you go. None of this is guaranteed. It's trading. Of course, you could feasibly get 5 or 6 losses in a row. I haven't seen it happen in my simulations and trading, but it can. Obviously, it can happen. The key is to really be prudent about the ones you're picking and the kind of market you're in. Obviously, if the market just lost, the Dow went down 1,000 points yesterday, you're going to let that shake out before you start buying call options. And it will, but you can watch it recover, and then you're back in the game again. So, it's just there's some common sense to it as to not, getting risk in the market. But generally, if you just limit your exposure, you should be fine. So you're going to enter the trade, and then when you exit, you're going to either exit on a stop out of the strategy if you have one. We have them in Fulgent. The day before expiration at the latest. You want to sell it. Or since you have this chart, let me show you something here. Since you've got this chart, which, like I say, very few software platforms provide this. So it's really, I can't just say enough how important this is that you do have it. And let me zoom in a little bit here so you can see it better. So I could put a 7-period moving average on this. Let me go ahead and do it real quick. Let's see, it's moving average down here. Where is it? There it is. I'm gonna drop it on this guy right here. And we want a 7-period, not 200, 7. I think everything else is okay. Yeah, it's gonna be red. All right, I did it right. Okay, so this is gonna track this instrument. And so it's gonna, if we actually had a signal, this would be moving up and it would be crossing that. So what you want to do is wait for it to cross the other way, is the other way to get out. It's a very tight moving average, very close to price. So, you go up through it, and then when you start to come back down through, that's an early exit. I prefer to hold to expiration for the reasons I was talking about. You basically, the market's on your side. You've got a trade that was at a low point in the chart, very likely to do this with you, and if just half of them do that and half of them expire worthless, well, you get the kind of curve I showed a while ago. All right, so let me see here. That is okay. So that's just an overview of kind of the mechanics of how to do this. It doesn't matter what trading system you're using or what indicator. You want something that has explosive move potential. And the only place you see those is in very strong breakouts where you have a big gap and the chart's moving up rapidly. Those are very good often, although you got to watch out. You don't fill the gap. You start to fill the gap, you got to get out. But so those are really good, though, good opportunities. And then these overbought, oversold levels. And we're talking about buying, so they're oversold primarily, especially when this kind of thing happens. A big move down, the chart starts back up, you've got that signal, there you go, it's golden. Okay. All right, so hopefully that helps you. And like I say, we have a way for you to get these slides so you can kind of follow this method at the end of the broadcast. Okay, so check my time, we're doing good. So now we're going to talk about what I'm doing. And Fulgent Technologies is a spinoff from my main company, Nirvana Systems. Its whole focus is AI, and really bring AI to the traders of other platforms out in the market like MetaStock. And like I said, you can tell how much I like MetaStock. It's man, you've got the right tool there. I'm telling you. So that's really good. But what we have done over the last really 24 years is perfected this AI. And I want to just give you a glimpse into what it is and then how it works in MetaStock. So the thing is, and with 10,000 stocks out there and on 4,500 optional stocks, there literally is a universe of opportunities. I mean, it's a huge number of things that are going to go up tomorrow. Huge number. And, your job is to find them. Well, you can find things that have good chart points like we just looked at, but finding the really, really powerful ones is kind of hard. What you need is some kind of a rule. And I've got one down here, RSI 14, less than 30, momentum greater than 0. So you have like what an expert has in it that is trying to find this setup, this particular situation. But they're, they are kind of hard to find. And so that's why we run a lot of experts and get a list of candidates to look through until we find one that really looks set up well. So the question is, how can we find trades with the highest chance for success? What is the best way to do that? And you know what I'm going to say, because it's what we're doing, but it really is true. Artificial intelligence has the ability to pattern match across billions, trillions of data points and find things that work together to find a profitable move. The way that we do it here, and we've been doing it for a long time, is using what's called a genetic algorithm. And a genetic algorithm uses things that are called chromosomes. They're actually, each of these little lines here is a rule, like MACD greater than 0 and so on. And each of these little purple squares is a piece of the rule, like momentum is going up. You're above the moving average. Volume has been increasing the last 3 days. All these things. And what the AI does is it looks at all the potentials out there, which is literally, I think I calculate it's like a septillion, It's more than that. There's just so many possible combinations, but we give it the elements of that, the individual little pieces, like here's a volume thing, here's a MACD doing this. We just give it all these little pieces, and it just chunk, and it creates these rules. And if you get our product, you can actually see it doing this on your MetaStock data, because you can retrain the AI and just watch it do it live. Okay, I'm going to show you a picture of that in a second here. But it's pretty cool. But all it's doing is it is looking for patterns that were profitable in lots of historical data, 100, 200,000 bars of data. And but the other thing is, we've been at this a long time. So if you use a pattern matcher, or if you use optimization, just classic optimization is so easy to get a curve fit. You find something that happened to show up in 50 charts or something, and you say, I've got it. This is the way to paradise. Well, maybe not. So what we do is we chop up the data in the test period, and we find rules on part of the data, and we evaluate them on the other part of the data. And what this does is it gives us a very consistent performance between the historical test and the actual live trading. That's very important. I'll have another thing I'll mention about this in a second, maybe my next slide. No, not quite yet. But there's another thing that we do, which is validation, that I'll talk about. So we've been at it a long time. It's been perfected. And what happens is that all these rules are accumulated. There can be 1,000. Usually it's 2,000 or 3,000 rules, and they go into what we call a knowledge base. So it's just a file out there, a database that has these rules in it. Quick Move is one of our experts, and so it's looking for certain things going on, and it says, yep, you got a quick move signal right there. So it's very fast going through all the data to do this, and works really well. All right, so that's more than you need to know to use it, but that's what it's doing. Okay, so let's look at the MetaStock version of this. So inside your computer, when you have this installed, there's an engine running. It's called the Fulgent AI engine, and it has everything. It slices, it dices, it does everything you need it to do, and it is reading the knowledge base to find signals in the MetaStock data. MetaStock actually passes this whole chart over to Fulgent. Fulgent accesses its knowledge base and calculates every single indicator, hundreds of them, on that chart, and then starts looking for rules that match. And when it does, it puts a signal out in the chart. Okay, we have expert advisory, all the things you would expect from one of these things that goes into MetaStock, an exploration and a system test. And to kind of go through this quickly, just to give you an overview of it, there are actually 4 different experts in here: swing trade, volatility, major reversal, and quick move. And each of them is looking for a particular little thing. We have what we call keys that go into the GA that say, train to this moving average crossover, train to a Keltner band crossover, train to a gap, and it'll stop on those and then look for things around those situations that are profitable over a lot of data. So anyway, so there's 4 in there, and then of course there's statistics over here about the rules, how many times they happened in the historical data, the average profit, that kind of stuff. There's not a lot to our expert advisor. It's really just telling you this is the nature of the rule that's trading, wherever it is, and where the stop is if you trade it, because we actually do have stops, and you can plot them in the chart with our template. The interface, I'm going to show this to you in a second when we get into it, is very simple. It shows our experts in it. And you can isolate individual experts, turn them on, turn them off, turn on longs, turn on shorts. So, but it's really just designed to be simple. Literally, you check boxes. You may find that you really like one gentleman, Roby says, I really like your major reversal signal. It's awesome. I just want to trade that. Okay, so turn the others off and just run it. And that's it. That's all you got to do. All right. So the other thing I wanted to mention is just this importance of out-of-sample data. And I kind of alluded to it, the fact that we train over certain data periods, and then the trading happens over other data periods. So in the expert that we're providing right now, everything past January 1st, 2018 is out-of-sample data. So all the signals you're going to see today in charts are out of sample. All right. The other thing I did is I tested Fulgent against the systems in MetaStock with the system tester, and found that Fulgent came out pretty well in the test of the ones I selected. And so that's a great thing. And of course, you can do this in MetaStock because you get the system tester with it. You can try this out. All right, we found out it's held up really well against the other experts that are out there in a mechanical basis. Okay, so let's go ahead and go over there now and just look at it real quick. I'm going to change my template, expert advisor, I should say, to, let's see, first off, I've learned this now. I've got to delete all the charts. Let's see, close all. And let's go back in here and let's open one. All right, same one, American Express. Or, yeah. And I'm going to attach our expert. Okay, attach the Fulgent AI stocks expert. All right. It's cranking up there. It's calling our engine. I'm going to delete this pane. Inner window. Let's see, actually I can delete it, I think. Window, I may be smelter. I deleted the title bar. So now how do I get rid of it? Inner window, close. There we go. All right, now you can kind of see these. So if you look across here, you can see the different kinds of signals. The current one on this chart that is active is what's called a, what is it? Major reversal. So, all right. Okay, let's see here. It'll be fine. No, so it's volatility breakout. All right, it had not refreshed. And so this is looking for a strong volatility advance. And of course, the AI is finding a signal at that point. The reason the gentleman liked major reversal is that it, we're going to get rid of this down here because we don't need it. Major reversal is because it tends to fire and then stay in trade a very long time. It has some loose trailing stops on it. And so it's designed to do that. And you can see it here right there, the major reversal. You see this quite often in charts where it just goes and goes for a long time. And there's a lot of people that's very appealing to because it's more like an investment. And of course, you know, if you're trading options, you're going to get out probably sooner than this. But if you're trading the stock, then you can stay in for quite a long time. All right, let me see here. Okay, oh, I know, I was forgetting something. I need to save as default template. And now I'm going to have it as I go forward. All right, so let's go look through some charts here. You just kind of see where these things are firing in the charts, just generically. Here's the quick move signal. These are very quick moves. Here's the major reversal back here. All right. And just get a sense for kind of where the signals are firing. So there's a swing trade there. All right. I saw some really good volatility breakout signals. I don't know if we'll see any just going through charts like this, but quite a few. There's, okay, one there. And a quick move here that did really well. All right. And in a little bit, I'm going to show you some performance reports that we did on this. Here's a volatility breakout signal getting up to there. And quick move. Quick move is a very good strategy. It's kind of the favorite in here because it's able to capture these very quick 3-day moves and does a really good job of that. So let's see, that was Walt Disney. And we'll go through a few more here. Okay, here's another quick move, signals, really good. Here's one really good. Here's a really good one. This one was about break even. All right, a few more charts here. So if I did an exploration and I got, you know, signals on the right edge, I would just go through that process that I showed you if you were going to trade options on it. But I know most people are trading the stock itself, and so, you know, you would just do that from here. Okay, let's see. A few more. Looking, hoping to see some of those really good volatility breakout signals on the right here. I have not seen any yet, but there's quite a few that are firing right now that are really good. Okay, well, there's one right here that ended up doing very nicely. It's already closed out. Here's a quick move, another quick move, and quick move. So it's pretty popular. Of course, if you go in here anywhere on a trade, it'll tell you where the current stop is, and, you know, for that rule that fired that, how accurate it was in historical data, and how many times it happened, and what the average profit was. All right. So okay. So what I want to do now is go over to the PowerPoint again and show you some stats, because we have a portfolio tester that we use to test trading systems. We basically pile all the trades into it, and we let it run with a certain allocation, and then we see how did it work. It produces a portfolio simulation curve. And so I want to share those with you here, kind of getting down to the end of the webinar, and then I'll answer questions. So on that, I ran the Dow 30 against the Fulgent AI strategy, the quick move expert, which is really the best one in there, because it's, AI loves short moves. It's able to predict those very well. So on the quick move expert, only risking 10% of the account. So I had 3 trades at 3% each. That's it. And the Dow 30 isn't very many symbols, so it's not trading all that often. But when it did, it was able to grow the account from $10,000 to $50,000 in 2 years. Which, this is why I say trading call options, if you have the directional accuracy, is really powerful. Because that's, if you were trading the full account, with margin, you would never expect that could happen, and it can't. So the only way you're going to make any gains like that is with leverage. And like I say, if you're only risking, 10% of the account, if you lost all of it, now you've got 90. You lost all of it, you've got 80. After a certain point, if you're really that unlucky, you should hit a run and then get one of these moves like this. Is what can happen. Not that it will happen or absolutely guaranteed or anything, but this curve is pretty indicative that that's very possible. And this is all mechanical. This is a mechanical strategy, just mechanically trading every single signal, holding the trades to expiration with an out of the money option. Just what I was showing you in MetaStock. That's exactly what this is simulating. And anyway, here is my intermediate risk proposition. And this is trade the Dow 30 on all the experts, all 4 experts. And you can see there's a lot more trading going on. There's some drawdowns in here. They're fairly small. This is a 10-to-1 return to drawdown ratio in this curve. But again, the same 10,000 starting gets to 134. And again, this is still just risking 10% of the account. Three positions, 3% allocation at a time, grows the account by 13 times in 2 years. And again, my purpose in showing these to you is not to say that this is going to happen for you. I'm trying to show you the power of this. That if you buy call options that don't cost much, $100 controls $10,000 worth of stock or 20, and you're in a place where it's going to move. It doesn't take very many to make this happen. And you can paper trade this. All brokers have paper trade facility, and just take an option position and just try it for a couple of weeks, see what happens. So this one is my aggressive. So this is trading 100, not the Dow 30, but 100 liquid stocks. Liquidity is defined by price times volume. So I made that calculation, sorted on that, ran that list. And this one, however, I'm risking 30% of the account. So that takes some chutzpah to do that. So that's pretty big positions. But it kind of depends on your risk profile. That may be appropriate for some people to try that. Probably not for most, but if you have a small account, it's like your Mad Money account, you want to let it run. Well, okay, you might try this. But 30% of the account, average gain 400% per year, 17 times in 2 years, 1,700% in 2 years. So again, that is just hopefully whet your appetite on doing this. I'm jazzed about it. I'm telling you, I've got a lot of my customers who are actively doing this right now as well. So I have a report for you on what I just showed you that has the actual trades, has all the stats on that curve, and like I said, the real trades with the options specified, and also a PDF of this presentation. So has the MetaStock training in it. If you'd like that, all you gotta do is go over, the classic thing, put your email in, and we'll send it to you. And we'll also keep you up to date on what's going on, because we have active development going on right now, and a lot of it is with MetaStock. So we'll just, if you do that, we've got your email, and we'll just keep telling you, hey, this has happened. We have this strategy now, and just keep you informed. So my last section here is just about Fulgent, and looks like I've got a few more minutes. So this may take about 3 to cover this. Oh, by the way, that URL, fulgent.ai/MetaStock, pretty easy. So fulgent.ai/MetaStock. And you'll see the MetaStock product below this on the page. Okay. So we have been getting a lot of questions from MetaStock users about things that they would like to see. And so we have been reacting to that. And I'm going to give you a couple of points here that have kind of come out of it. I get questions, and they would be on this webinar, I guarantee you. Does Fulgent AI work with Forex, the futures, in real time? And the fact is, yes, because we recently added the ability to retrain the AI on any darn thing you want to. You can throw any data at it you want to. You want to reserve forward test data, to look at, because you don't want to run the AI on that, like reserve a couple of years or something in the forward part. But the manual is very clear about how to do this. It's not hard, and you can, like, real time. And we have people doing this. We have focused on end of day because that's where most people trade. We're a business, we're selling software, so we've kind of stayed there. But people are doing this, and it's not hard. You can run continuous contracts, futures on it, and it will find profitable rules, guaranteed. It will find them, and then you can test it in the system tester. All right. Another question, does it do shorts? You didn't see any shorts in my presentation. You can turn them on. You can set that in the expert. You can turn all of them on, or just individual experts. And the reason I don't use shorts is because there's very far fewer places where the market goes down than it goes up. So the AI has much more data to train on the long side. They're more accurate for that reason. So I just prefer to trade the long side. There's always pullbacks you could trade. Yes, we'd all like to catch the 500-point drop in the Dow for sure, but you don't need to do that to be successful. Those don't happen very often. Just kind of wait, let it work itself out, and then get back in. But you can do it. We have them in here. This is the big one. A customer called and said, hey, Ed, I've got this Bollinger Band thing that I really, really like. Is there any way to train the AI on that? And we, of course, we have training ability in our main platform where we do all the work, right? All the development. And so I got to my guy, I said, hey, can we put that in here and just make it where they can access it? And he goes, yeah, sure. Of course, he's really good. So for him, it's easy. But so he did that. And I want to show you an example. This is really simple, okay? I've got this condition, red and green, right? This is RSI 3-period RSI. I want to look at buying when it's down here, oversold, and selling when it's overbought. Of course, if you traded that, you'd get massacred. So I need the AI to tell me which ones of those to trade. So I train it, and lo and behold, this is what it comes up with. Here's a quick move right here. Here's one here. Here's one here, one here, and one here. And so it is actually on RSI 3, less than 30, found those signals on quick move. It retrained the quick move strategy to that condition. So think about what you can do. If you've been using MetaStock, use indicators from other people, whatever it is, you can just put that in there. It literally, you edit a file, and there's one little place where you put this formula in, and it can be anything, any Boolean, true or false, MACD crossover, moving average crossover, whatever you want. You just edit that, you change that line, and push boom on the AI, and it'll go run it, and that's it. After about, typically it's about, depending on how long you let it run, maybe 30 minutes. If you let it run for a long time and generate a lot of rules, it's better, but you don't have to. 30 minutes is usually enough time to see what it does and get excited. Okay, so when I did this test, I put it in the system tester, this exact test, and this is what I got. That system by itself is a dog. RSI 3, buying and selling, forget it. Doesn't work. You train the AI on it and let it pick out the ones that it has found to work because of other indicators around it. Yep, pretty good. So, and you can replicate this because this is the default. It's what's set up in there. So you just retrain it, and you will see that outcome. Now, I want to mention for those of you who have the product, I'm sure there's quite a few of you on here. Jeffrey, sorry, man. Long day. Jeffrey said, sorry about that.
You're okay.
I'm almost done.
I don't
almost
know.
done.
You're not going to offend me. Don't worry.
Okay. Oh, good. I like your day. It's kind of cool. Okay. So boot camp next Tuesday, February 4th. We're still on, right, Jeff?
Yes. I'm glad you're talking about this.
Okay. I'll let you do it then. We've got that going. So my last slide is Fulgent AI is seamlessly integrated for powerful experts. You can train it on anything you want, any time frame, any indicator, any symbols, and it will create magic in your charts. Give it a shot. And I think Jeff is now going to take over and tell you what's in the package and how you can get it.
All right. Yeah, let's go ahead and do that. Let me go ahead and grab the presentation control. Thank you, Ed. A little comment here from Randy Rackman. Thank you for sharing your knowledge, Mr. Downs.
You're
and
welcome.
Lewis asked a question, would you use price times volume rather than float to measure liquidity?
If you look at float tells you how many shares are out there, if I understand the question correctly in that term. May mean something different, but what it means to me is how many shares are outstanding. And people sock these things away. Institutions do. They're just sitting there. They're not trading them. When you do price times volume, that's how much money changed hands to acquire that stock. It's that flow of money. So if $1 billion changes hands on a particular day in Microsoft, that's may not be a lot, but that's a lot of money. So it's really how much energy there is, and what that does is it gives you more liquidity, is kind of what it measures.
Perfect. Okay. Very, very good. All right. Okay, so I guess it's my turn. Let's go ahead and I was just actually trying to multitask a little bit there and kind of I had added a specific slide about the bootcamp class, and I was trying to get it loaded, and it was giving me a little bit of a hard time, but I've got it worked out here. So let me go ahead and share my screen real quick, make sure everybody can see it. And now you should be able to. Let's go ahead and hide this a little bit. So it's a pretty good, Ed always does such a good job about kind of explaining the Fulgent AI and how you can use artificial intelligence with MetaStock. And he's been just so thorough in terms of putting together the product, creating something people liked, being very, very well tuned into people and kind of like what they want to see out of the product, making changes to things. He's done a really, really good job, and it's been extremely popular. One of the things that I kind of brought up today with Ed is we should put together a little bit of a class for people. So whether it's like, let's show you how to kind of train the AI, let's show you how to run the scanning, let's show you how to work with things with MetaStock. What I wanted to do is like when the product's available and you purchase it, we usually have a little bit of a boot camp or a training session that's available, and it's usually right below the purchase. And we normally do that and just make it available for you. The boot camp, so we only record it as a one-time thing. So next Tuesday, 4:30 p.m. Eastern, we're going to sit down in a live webinar environment. We're going to invite everybody that has access to Fulgent AI, and we're just going to go in and show you kind of like, here's how you retrain the AIs, here's how you do things with Forex markets if you want, here's how you run the explorations. And we're going to make a class that's real as long as it needs to be to kind of give you a really good idea of how things work. It's going to be free for everybody that has Fulgent AI, so I'll make sure to send out an invitation for everybody. So if you've already got Fulgent AI, thank you, number one. Number two, I'll make sure that you're invited to this class. You don't have to do anything.
No, you forgot one thing, Jeffrey.
Yeah. What did I forget?
Simple. It's going to be simple.
Okay, and it's going to be simple.
Easy. Everything I show, anybody can do. No, figuring stuff out. Okay.
Perfect. Okay. Normally, Fulgent AI is going to be $149. We're still, for some reason, doing it as an introductory price of $99 per month. I don't know why Ed has actually let me get away with this price for so long, but I'd encourage you to kind of get locked in at that introductory price. To do that, you can give us a call, 800-882-3040. You can visit metastock.com/Fulgenta, Fulgenta, which I think is a color.
It is.
And metastock.com/saleschat as well. So,
very good.
All right. I do see. I saw a lot of questions coming in, but it just turns out it's Greg providing information to people in YouTube. So, with that being said, Ed, do you have any final thoughts?
You might want to show my screen one last time for that report that they can get. They may not remember it, but the other thing is you can email me directly at Nirvana Systems. So it's Ed at actually they have me an email address. I forgot this. They added me in Fulgent, so it's ed@fulgent.ai.
Okay.
So that's there, and I've fielded quite a few questions from users. Love doing it.
Yeah, you're great.
Thank you.
Yeah. In terms of listening to people, in terms of seeing kind of like we've had nothing but really good feedback from people that have talked to you guys. So I appreciate the support, and so do our users.
Well, me too. From you guys. You guys have been awesome. So thank you.
All right, very good. Thank you, Ed. Thanks, everybody.
Sure.
We'll see you at the next one.
All right. Next Tuesday.